Hey, everybody. So tough markets out there. And I think, as I always talk about in many of my programs, it's just a reminder, everyone, of the disclaimer. So that anything we talk about today is for educational, entertainment, and information purposes only. It's about quality. And as we find in these kinds of situations where the market does start to give back and re-rate really across the board, it starts to correlate to the downside. Everything starts getting sold off to a large extent, maybe some very, very unique defensive kinds of areas can hang in there a little bit. And of course, things like gold. But generally speaking, we want to start refocusing a little bit in on quality. And I put out a video a couple of weeks ago talking about how I look for low vol stocks. Not that they're immune completely to large sell-off, but that's where you really get those sleep at night type positions where, if the market does fall off a cliff for a little while, you really don't want to be stuck in those high multiple kinds of stocks, more speculative stocks that are really going to have a little bit more trouble, I believe, getting off the mat in a new reality. So I want to talk about, do a little series on stocks that I really like, companies that I really like. Just talk a little about, you have to really kind of wrap your head around what the company is like, what that mode is like, what is the cash flow like, how is there, there are other metrics that we look at in my various programs, but we always look for certain metrics. How is the return on invested capital? How are they doing investing your capital? Are they getting a good return on that capital, or are they getting a poor return? Well, you want a better return on that capital. So that kind of capital allocation, the things that companies do within is very, very important as well. And so everyone's favorite streaming company we're going to talk about today, and that is Netflix. There are just no real close seconds in this kind of business. Hey, everyone, if you haven't subscribed to the channel, please do, and be sure to download my free Options Cash Flow Blueprint, a step-by-step guide for how to go from complete beginner to options ninja. Now back to the video. And so I talked about this years ago. I was on TD Ameritrade talking about how this is really one of my top picks around 225, and it's just been gangbusters since. And even back then, I could see that this was really becoming the go-to place. What do people want? They want variety, they want content, they want quality, and it isn't just that they've captured a great majority of that. People don't want to, surf around across 4 or 5 different products. They want to be able to have a one-stop shop for their viewing needs. They're starting to get into live events. It really is an amazing company. And once a company gets sort of as big a head start as this, it's very difficult to overtake them, right? They start to get the content because content creators really want to be on the best platform. It starts to become a self-fulfilling prophecy. And Netflix, very, very smart. The content can be very expensive. So years ago, they decided, well, let's start making our own content. Why? Let's just cut out the middleman, start making some stuff. And of course, they're always up there in the award shows and everything. They're doing great. And so they've really, really figured out this sweet spot of how to conduct this business. So this is the kind of business that can do well in a very good economy because everyone loves good content, and that doesn't go, that doesn't go by the wayside. But in a difficult economy, anybody can afford, not anybody, but most people can afford $7 or $8 a month for unlimited content. Think of what you get for that. I mean, you can sit there and watch TV 24 hours a day, 7 days a week, and get just, constant content. That is very good value for your dollar if you start comparing it to other kinds of entertainment, going to sporting events, concerts, even going out to the movies. I mean, this ends up being something that I believe is fairly recession-proof, and they still are expanding around the world. So very, very, very solid company. And of course, one of my favorite things is free cash flow. Look at that. I mean, this is a company that, a bit like an Amazon kind of, went through a difficult period where, I mean, in Amazon's case, probably intentional mostly, which is to really fund that e-commerce business as they take over the world. Very lucky to be able to do that with their cloud service revenues, and then eventually turn on the tap. And we'll talk about Amazon in another video because that's another one of my favorites. But Netflix, free cash flow, just absolutely exploding. Let's take a look at subscribers is total paid net membership additions, right? So largest ever quarterly subscriber increase in this last quarter. And so this is it. The barrier to entry just gets to be very, very high in this area. It's very difficult to get in there and mow their lawn. So it's one of those companies where I like to say they're not trying to win, they're winning. They've already won. and it's going to be very difficult for somebody else to get in there. Let's take a little bit of another look here. We have got streaming revenue just increasing year by year by year by year, right? So I just love to pay, even if it's a premium, for far and away leaders in their respective industries. Very, very solid company. And other metrics that I like seeing: return on invested capital that I mentioned, 13.8%. That's very modish. I tend to like to see maybe 15%, but that's very, very good. Gross margin above 40%, 46.1%, phenomenal. Free cash flow margin, 17.7%. So high free cash flow stocks. It's one of my favorite charts out there. High free cash flow stocks, selling puts on those, selling options on those, tends to outperform by 18% a year. Enough said. This is where we want to generate some income. And when we're income traders, we want stability, we want quality, we want cash flow, and we want year over year over year of positive trends in many of those metrics that we like to watch. Just a great company on paper, metrics wise. So I love the story. So that covers Netflix. We'll see you guys in the next one.